Partnered by Times Influence.
Hello and welcome to another episode on the 4th edition of Birla Sun Life Mutual Fund presents Voyage Navigate 2017, powered by ET Now. Now, the job of the head of an organization is pretty much like that of the captain of a ship. He has to have one eye on the horizon while also continuously overseeing the progress of the vessel. Nikunj Dalmia sat down with the CEO of Birla Sun Life AMC, Mr. A. Balasubramanian, along with the Chief Executive Financial Services at Aditya Birla Group, Mr. Ajay Srinivasan, for a view from the top deck.
Ajay, it's a carnival feeling right now. Everyone is feeling happy. Markets at an all-time high. Inflation has got crushed. SIP culture has started. There are concerns in the world, but global financial markets are ignoring it. So we are at a reasonable level, but where do we go from here? Markets, they always climb the wall of worry and they come down on the ray of hope. I just get a sense that there is a lot of hope in the markets.
I think it's fair to say that sentiment is probably the highest it's been in some years in some years that we've seen. I think the recent elections only boosted that sentiment. I think what's happening in other parts of the world are again boosting sentiment here. And like I said, I think there's just so much of liquidity both internationally and domestically. I think that's going to keep fueling financial asset prices. So I think you should be ready for some volatility, and I think many times the market's going to be behind where the explanations are going to be behind where the market is. So we're going to find reasons for why the market is where it is. But I think you're going to continue to see financial assets doing well.
Bala, the real success for the Indian mutual fund industry has been emergence of the entire SIP culture. What has changed so dramatically? SIP is not a 3-year-old product. SIP is a 15 or 20-year-old product. It was visualized by the industry ever since the AMC industries were formed in India. But why there has been such a sudden resurgence in the SIP culture?
So one of the key reasons is everybody talks about it. I think there's a uniform voice that is being heard across the country about investing through SIP. That has now become a mantra. And it's now become part and parcel of every mutual fund in the country. It also is now part and parcel of every investor in the country. Second, I think Ajay spoke about volatility and the bumpy ride. Also made people realize, am I actually making an attempt to call the market? And most of the time we decide, if the market goes up, you wait for the market to come down to make an investment, which you never do. If the market comes down, you wait for the market to come down further, and therefore you wait for investment to be made. And both the side, you only keep waiting actually. So that is, I think, made a lot of people have realized that investing through a systematic investment plan, I think, is the best route. And that, I think, is something which now every individual start accepting it.
Bala, I guess a lot of, millions of viewers on ET Now and large part of the audience say they would be keen to understand from you that for next 3 years, which style of investment would work. It is important for AMCs to identify these turning points. As AMC, Birla was able to identify a lot of turning points. When you talked about managing the market volatility, you talked about, how one should invest in balanced funds. There was a small proposition when you launched your banking fund, I think, a couple of years ago. So what could be that big turning point? Where should one invest for next 2 or 3 years? What do you think some of your financial distributors should be advising their clients?
I think clearly what we as a fund house have realized, so while each manager who are responsible for managing different funds will have their own style of managing. From the investor's point of view, what we keep harping all the time, that one has to expose yourself into owning an exposure into the diversified large cap fund first. Then comes actually the diversified equity fund, which I invest across the market cap. Then comes actually is the diversified equity funds in the mid cap category, and so on and so forth. That's, I think, order in which we normally suggest to the investors that they should make an investment.
Ajay, I can speak on behalf of media industry, and the criticism which we get is that there are too many business channels, there are too many news channels, there are too many entertainment channels. I can speak the same about the mutual fund industry right now. Too many fund houses, pretty much the same proposition, yet Birla AMC and Birla Financial Services, they managed to really cut from the rest. In all the major businesses you are present, you are in the top 3 quartile. So what's the secret sauce here? Is it commitment? Is it performance? Is it team? Is it your vision?
I think it starts with our vision of wanting to be leaders and role models in every industry in which we operate. And I say that vision has a base in economics and the foundation of business. It starts with wanting to be a leader because if you look at all the industries in which we operate, the top 5, 10 account for 90 to 100% of the economic value in that business. So if you're not going to be a large player, you're not going to participate in the economics of the business. And I think to be a role model to us is important because this business is ultimately a business of trust. If you can't build trust with your customers, with your partners, with the regulators, then it's very difficult for you to continue to grow in this business. And I think we've really focused on those two elements from the beginning. And I think that's been our guiding post as, in a sense, building out these businesses. And second, I think this business is all about people. And I think we have focused right through in terms of making sure we have the best talent and an empowered bunch of people who can go out and actually make things happen. And I'm just blessed to be able to lead a team that is absolutely so spectacular.
Now, technology is going to change the way how mutual fund industry would also be moving, whether it is robo-advisory or this entire debate between active versus passive or how machine-based trading is really taking over. Where are you on your stand? You're insisting that people are important, but the way global asset allocation is changing, who cares about people? It's all about machine and low charge, I guess, or low expense ratio.
So I think there will be some products, the ETF type products that will become much more machine-led, and I think we're seeing that trend in a big way in the US because active fund management is not yielding as much as it does here. I think we are still, some years away from that. I still see active fund management yielding adequate returns in India for the next 5, 10 years, and therefore it's going to be some time before you see that becoming a very large category. The institutions may still want to access that in some form, but I think as long as active fund management yields the results it is today, I think there's a long way for that. And I think as far as robo-advisory is concerned, just looking at the penetration in India, looking at where people need to move and where people are in their financial literacy journey, I think, again, it's going to be a long time before you start seeing machines replace face-to-face conversations with people. People will still go online, they'll still research, they'll still want data, and that's not going to stop. That's going to get even richer. But I think ultimately, I believe people like to have a discussion with somebody.
Bala, last couple of years have been good because the mid and the small caps end of the market, the inefficient end of the market, that has made a comeback, and the market returns have been absolutely, grand. But where do we go from here? Given that Indian markets, they are efficient, be mid and small cap stocks, they are no longer available at attractive valuations. So do you think the return expectations from equity, from mid-cap stocks, and even from the debt market or the bond market should be diluted?
I think clearly, of course, return expectation at each level has to be moderated. And we have seen this historically. After seeing market giving almost 100% return in the year 2014, almost about 60-70% return per year. And that cannot be actually the benchmark for the subsequent year for generating return out of the equity. Then we saw actually that 2015 year was flat year, 2016 year was a good year. And that's, I think, averaging out that we have always seen happening in the market. But having said that, the expectation of an equity, which of course one has to go by the benchmark, which is the nominal GDP plus risk premium of 3-4%, that should be the benchmark that should keep. If anybody, of course, generates more than that, that should always, people should consider always as a bonus, as extra something they got because these various things have played out in that.
So I'll wrap it up there, but before I hand it back to Sumit, let's put our hands together for Ajay, Bala, and the entire team. We should be proud of, what an institution they've created. I've been tracking Birla AMC for nearly decades now, and trust me, every time I look at the numbers and the kind of delivery they've done, my jaws dropped, and secretly, I salute them for their consistency. Thank you.
It's now time to hear from a man who is helming Godrej Consumer Products. He joined the organization in 2009 as the Chief Strategy Officer and was responsible for enhancing the strategic capabilities within the group companies. Here to share his experience and vision for the future while talking on the topic, ears to the ground, consumption in India is shaping up for phenomenal growth. Please welcome the MD of Godrej Consumer Products, Mr. Vivek Gambhir.
It's not a surprise to most of you that the last few years have been somewhat difficult for the FMCG sector. This used to be a sector, and I have data starting in 2006. For about 5 or 6 years, FMCG as a whole was growing at about 1.2 times the nominal GDP growth rate. And so if nominal GDP was 10-12%, this sector was growing at about 14-15%. If you look at the last 2 or 3 years, what has happened is that the FMCG sector has been growing at about 0.8 times the nominal GDP growth rate. Particularly if you look at last year, Last year, the FMCG sector actually grew at about 0.5 times the nominal GDP growth rate. So as we've seen a bit of a slowdown in India, certainly FMCG, which saw a significant period of growth, did experience some hiccups over the last few years. And the primary reason for this slowdown was that a lot of growth in FMCG was being driven by growth in rural India. As you saw rural consumers becoming a little bit wealthier, earning income, a lot of income in rural India was driven by MSP increases, NREGA, a lot more rural jobs getting created, which led to a lot of rural wage increase. Over the last few years, we saw a dramatic slowdown as far as rural growth was concerned. While urban also started seeing some slowdown because there are not enough urban jobs being created. But net-net, a big reason for the slowdown that you saw in FMCG was the slowdown that you saw in rural India. Generally across the board, apart from toilet soap and shampoos and conditioners, which are almost 100% penetrated, across all the categories, there is tremendous headroom for growth. And the logic is quite simple. As incomes increase, people will want to spend more money on actually looking good, feeling good, and looking healthier and feeling safe as well, which would really impact the FMCG sector. The other big opportunity, as I mentioned to you, is if you look at the salience of FMCG, while 70% of India lives in rural India, only 36% of spend is today in rural India. So the future consumer will be looking for affordable branded products in rural India. That should lead to tremendous amount of growth. We have taken on a target to train 1 million youth in India in skilled employment. Lots of goals in terms of zero waste to landfill, carbon neutrality, positive water balance, energy reduction, etc. And then we also believe that over time, we have to keep on creating products like the Godrej Good Night Fast Card at 1 rupee. We have to create products that will cater more to the bottom of the pyramid and try and make products as affordable as possible. Thank you very much.
It's time to move on. I'd like to invite back on stage ET Now's Nikunj Dalmia for a very special interaction with some of Birla Sun Life AMC's partners.
On my right-hand side, on my left-hand side, we've got galaxy of distributors. Some of them are your friends, some of them are your associates. And, we've been debating, deliberating, discussing and ideating that what has changed for the Indian mutual fund industry. Why the SIP culture has made a comeback. If it has made a comeback, is it here to stay? In terms of product category, product classification, what are some of the new specific advice which some of the best distributors and fund managers are indicating to some of their clients? So what we will get now, I would say, is a complete roundup of the Indian investor. Meenakshi, first tell the audience a bit about you. About the kind of work you are doing, the geography you represent, and why do you think this entire culture towards investing from physical asset class to financial asset class has started?
So I'm from Pune, and my husband and I run a firm called Interest Advisors. We work with the high net worth category of investors, and we've been at it for 20 years. Your question was that why has this movement happened from
exactly.
Very intuitively it's happened because we are at a positive real interest rate scenario, and as long as real interest rates remain positive, money will continue to flow into financial assets.
But the fact that interest rates have gone down, inflation has got crushed, this is a cyclical phenomenon. What we are witnessing in the financial market is a structural change. Why is that this structural change has not happened before when financial or alternates have also not given such superior returns?
So part of the reason is that when 2008 happened and we had this huge crash, all of us as distributors and advisors did not disappear. We were still alive and we were still working and we were still building that feet on street. So there has been a lot of work by the AMCs, by the manufacturers and by the distribution community, and some of us are advisors, where we have worked very hard to bring newer people into this investing community. Another very important thing is you need to keep those feet on street, because if the cycle turns, you don't want these new investors to quickly run away.
Mr. Roy, pretty much an extension of my first question. First, I would request you to just introduce yourself. Tell us about the headline from your region. What is the big headline?
Myself, Shajul Roy, proprietor Anjali Investment. I have been in this business for the last 20 years. So I've seen a sea change in this industry. So the headline obviously is mutual fund these days, financial assets. I will give you the reason, Mane, because I will just give you anecdotal events. What happened in 2003 when the initial bull market started? That time, real estate and gold was also booming. So there has been many investors who have never come into mutual fund. So now what is happening? Only asset class which is giving positive return over these last 1 or 2 years. So that is financial assets. So you can see that sea change coming from that physical assets coming into these financial assets. Another thing, we are getting the fruits of what we have done for the last 20 years, educating our clients of reaching their goals for a decade or so. So all these things put together, the headlines is this, financial assets growing leaps and bounds.
So I'm just going to turn to my immediate right. It's always important to get that Delhi wale ka opinion going. Damdar Delhi wala opinion.
So the headlines in Delhi is that earlier the most nikamma child in the household became a property dealer because property was booming. I think that trend is changing. I think people, their love for property, their love for cash, their love for showing off that cash, is coming down. It's structurally coming down. And being a Punjabi, I can vouch for it. So what we are seeing, Nikunj, is a major disruption. And why I say this as a disruption is, I was seeing some tweet that the mutual fund industry, for example, grew 9 lakh crores in first 50 years. And we added 9 lakh crores in last 3 years. So we are compounding at some 30-35%. Secondly, Nikunj, the other thing which is happening is, and I'm a great believer, is the new middle class is very aspiring. And this middle class, unlike our days when we started, we believe in getting the first house, taking loans. We used to burden ourselves, right? So the today working population, wants to have short-term, medium-term goals. They have a goal of making a vacation 2 years from now. They want to buy a nice car 3 years, 4 years from now. So they want to experience, what about the asset rather than, really owning it. And that change is driving this savings, towards financial instrument.
Mr. Sinha, first, if I may urge you to just introduce yourself and tell us a bit about what are the trends which you are getting from your investor. If you have to, let's say, tweet a trend,
sure.
How would you tweet that trend?
I'm P.K. Sinha from Kanpur, representing a company, Deep Management. And what my gut feeling is that people are changing. The investment style of people are changing. They are more and more dependent on themselves to take care of their future responsibilities. Earlier, it used to be only fixed deposits. They are assured that they will get the, say, pension, they will get the fixed interest, and they will take care of their family. Now the things are changing. People are looking as an entrepreneur. So they have to manage their day-to-day life on their own. So by default, people are going for equity, and equity is something, or rather mutual fund products. That's how they are managing to earn something extra.
Tell me what's the headline from your region.
Well, I'm from Coimbatore. Again, the trend, what investors are expecting now, since interest rates are falling, they want a fixed term. Say it is for different occasions, the goals are mapped for short term, long term, and other various asset classes. They just park it. And for each goal, they're mapping it, the duration, when they require the money. Then accordingly, the funds are given. Suppose a child is there, they told 20 years, I don't require money. So we give him aggressive funds to those customers. Okay, 20 years, you don't by taking risk, give for a longer term duration in small caps and mid caps. Bring in aggressive funds.
What has changed in the last 2-3 years for you?
Yeah.
One is what you're advising, but what has changed and why it has changed?
Yeah, the falling interest scenario and seeing the past performance returns the funds has delivered. Seeing the returns, the clients are okay, isme zyada milega. I will go in for this. Becoming that way.
Okay. So it's the fact that other asset classes are not doing that well is one of the reasons why money is moving back into equities
Yeah.
and for that matter balance fund. Anup, first introduce yourself just for the benefit of the audience here.
Sure. I'm from Bombay and the company called Money Honey Financial Services Private Limited. I have founded this company in 2008.
What I'm trying to understand that from in psyche of people who live in Mumbai, what has changed? Why are they being forced to look at equities?
So there are two things I probably can comment. One, love towards fixed deposit is somewhat going towards southward directions. And two, I think people have a somehow not good experience to the direct equity in 2008. So most of the people are still holding JP Associate, Unitech, Lanco as an infrastructure stocks. But in the same thing, mutual fund have delivered the better returns in the same period of time. So same customer today in Bombay is going through a mutual fund and not going through a direct equity.
Balraj, first, just tell us a bit about what the geography you represent and what are the trends you are getting from some of your investors.
This is Balraj from Hyderabad, Telangana. I'm a certified financial planner by qualification and I represent Net Worth Financial Planning. Most of the people don't even know what a mutual fund is. And most of the assets, most of the investments goes into real estate and gold. Hardcore real estate and gold investment people. So from here, we have been focusing there and we are getting a lot of inflows. And I got one goal by doing these programs. Over the next 3 years, our aim is to get to manage 150 doctor families.
Bharat, just give us a brief profile of the geography you present. And what I also want to understand from you as a follow-up question is that, are you getting a sense that at least some of the clients and some of the investors you work with, are they first-timers or are they converts for increasing their allocation?
I'm Bharat. I run a boutique financial planning setup with a footprint in Calcutta and Bombay. So my sense is I don't deal with a lot of retail clients or very super HNI kind of clients. So most of the clients that I would like to categorize them as medium net worth individuals. My understanding is the mutual fund industry per se has been largely underpenetrated. I mean, we've had enough research which shows that the percentage of investors investing in mutual funds has been like in single digits. So the world is open. So my take is that, at least at my end, we make so many new investors every single month. It's not funny. With all the regulations, the KYCs, etc. So we just keep running out of time to make sure how many people can we get on board. So I think, yeah, right now, my take is we're getting a lot of new investors. And of course, the existing ones are increasing their allocations.
But the bottom line I want to make here is that we should be happy, proud, excited, yet watchful about the times I guess we are living in. We tend to really focus on a very small, myopic kind of investor audience, but the comments which you're getting from everyone is that the Indian saver is getting up. If Prime Minister Modi is talking about Jan Dhan, we should talk about Jan Nivesh. Everyone in India has right to invest. And I think rather than just focusing on what we have, we should really look at really expanding the entire savings net and that the magic would happen.
Well, that's all on this episode of the 4th edition of Birla Sun Life Mutual Fund presents Voyage Navigate 2017, powered by ET Now. It's time for me to set sail right now, but next week we'll be putting the spotlight on equity investments and we'll get you to meet all the people behind all your equity holdings at Birla Sun Life AMC. Until next time, many thanks for watching.
Partnered by Times Influence.